Hello, I'm Susanna Streeter and welcome to Money Live's webinar, keeping the customer experience at the heart of fraud and financial crime strategies, hosted in association with NICE Actimize. Well, over the past year, we've seen perpetrators of financial crime becoming more skilled and resourceful than ever before, and the diversity of the behaviour is making them increasingly difficult to track. So, as criminals continually evolve, just how do the banks evolve their strategies to combat them? And crucially, how do they ensure an excellent, seamless customer experience along the way? Well, over the next hour, we'll be unpacking the latest in fraud and financial crime prevention and how to ensure that customers always sit right at the heart of strategies. We're going to take a closer look at advances in AI, the framework approach, and the question on everyone's minds, just how do you strike that balance between managing risk and reducing customer friction? But first, let's meet our panelists. And I'm pleased to say, first up, we have Visa Suvilla. Please tell us a little bit more about yourself, Visa.
Hi, Susanna. Thanks for invitation. I'm a global fraud expert from Nordea Bank. I'm myself based in Helsinki. Nordea, we are also present in other Nordic countries, in Denmark, Sweden, Norway, besides Finland, I mean. And I'm working in our fraud management unit for fraud prevention strategy. I'm an SME for card fraud. And yeah, I'm looking forward to our discussion.
We're looking forward to having you here as well. I'd like to introduce as well David Wright. Welcome, David. Please introduce yourself. Tell us what you do and where you are.
Thanks, Susanna. So I'm David Wright. I'm currently based in Edinburgh. I'm a senior manager in Lloyds Banking Group and working on the fraud and financial crime strategy. So I've recently held roles within transformation and within first line risk. And we've just launched our 3-year strategy and future vision for economic crime prevention in the last 9 to 12 months or so.
Well, I'm looking forward to your insights. Certainly you'll have a lot to bring to this discussion. We're also joined by Phil Cool. Phil, it's great to have you with us. Tell us a bit more about yourself.
Hi, Susanna. Good afternoon, everybody. Yes, I'm Phil Cool. I'm the MLRO at Oak North Bank. Oak North, if you've not heard of us, been around about 6 years, do 2 things. So we take deposits through our savings channel for retail customers in the UK, and we do mid-market lending in the UK as well, which is our USP. Been in fin crime for about 13 years and looking forward to the chat.
So a lot of experience to share. Thank you very much, Phil. And last but not least, we have Adam McLaughlin. Hello there, Adam. Please tell us a little bit more about yourself and what you do.
Thank you very much, and thank you for having me. Good afternoon, everyone. I am Adam McLaughlin. I am the Global Head of Strategy and the AML Subject Matter Expert at NICE Actimize. NICE Actimize is a software vendor offering financial crime solutions to the regulated sector. My background isn't in the vendor though. My background is in fin crime. So before this role, I was in the banking sector, managing financial crime operations, and before that I was a police officer for 10 years, police detective, latterly in the City of London Police managing financial crime investigations. So thanks for having me.
Some great perspectives to share, I'm sure. Thank you very much, Adam. Well, over the next hour we'll be covering a lot of ground, and you may well have a few burning questions or comments yourself, so we want to give you the opportunity to put your questions to the panel. Simply send them in to the webinar through the question section on the right-hand side of the webpage, and we will try and answer as many of them as we can towards the end of the discussion. And please also feel free to share your own experiences with us. Share them on Twitter using our hashtag #CXFinancialCrime. So do please share your views and your experiences on Twitter. So let's kick off and start with the basics and get to grips with exactly how financial crime is evolving and the subsequent impact on customers, and specifically how customer friction can be reduced along the way. Phil, I'd like to ask you first, where do you think we've seen the greatest shifts in financial crime activity over the past year? And what do you think have been the reasons for this?
Yeah, it's an interesting question, Susanna. I don't actually think there's been a wholesale shift in the types of financial crime activity. All the main threats are still there across the fraud and fin crime spectrum. But it has been quite startling how quickly the criminals have adapted to the pandemic and the changing situation, and reinforcing the issue, if we needed it, how quick they are to adapt and how little they care about us and the environment that we're in. I mean, it would be remiss of me not to talk about COVID and its impact, which has obviously been, the major factor in the past year. We have, of course, seen and will unfortunately see in the years to come the outcome of direct fraud against the government from the government loan schemes across B bills and C bills and direct loan application fraud through those schemes. We've seen a huge ramp up, of course, in phishing, in scams, in malware attacks and other cyber-enabled fraud. I'm sure we've all experienced certain scams, NHS, HMRC, Royal Mail, that have occurred in the past year. So that's been super prevalent, as you might imagine. And I think working conditions and the change to remote working has likely increased internal fraud that we're going to see through companies. Again, I think we'll see that in a few years' time as that kind of works its way through the system. But I think that has probably been enabled through this last 12 months as well. And I think just coming out of the pandemic, it's created a bit of a perfect AML storm, in my opinion. So we've got the economy coming back. We've got firms wanting to do business. Is that increasing their appetite to do business because it has been such a difficult sort of past 18 to 24 months? Has the remote working altered, controls? Has it made certain controls weaker? Has it, just weakened the general financial crime framework? And all those things together is that, creating a real opportunity for criminals to get into the system even more so than they are now.
Yeah, well, it's really interesting. You laid out the state of play there really effectively. Phil, I want to bring in Visa now. We've heard about the challenges. What additional measures have banks implemented to try and combat this? For example, risk modeling, new technology, KYC advancements, for example.
Yeah, well, first of all, I think Phil put it really well, covered all the different areas we have seen, and I also agree with him. There are still the old modus operandi present, but yeah, fraudsters are really quick to adapt to new circumstances. And for instance, people are spending much more time online. They're shopping more online. There are differences between markets, but on a general level, we are spending time on social media, reading our emails. So scams, phishing, that's what we see. And I think number one prevention action in the past year has been authentication, or maybe more dynamic linking, if you think of card transactions, so that we really show our customers what they are about to authenticate. For instance, we do see lots of these parcel delivery scams. You get an SMS, say from DHL or UPS, saying that you have to pay a small fee in order to get your packet delivered. Well, it's a scam, and when you press the button, you go in and you will make a transaction, which is what high value transaction. And in one of our markets, we didn't have dynamic linking early this year, and we saw a large attack in this sort of parcel delivery SMS. But once we implemented dynamic linking, we suddenly see a drop in these attacks. So it's really important to make our customers aware what they are doing. But of course, it's not always customers. It's also third parties. It's a data compromise. So there we need to have our detection tools in a proper way. We have to understand our customers' behavior, what is normal, what is not normal, and I really look forward to the opportunities for the 3DS transactions, all the enriched data it can offer. We can really see the devices used for transactions and so on. So
yeah, I mean, it does provide all of this kind of reassurance, doesn't it? So much more, and so much more, it appears, is needed. I want to bring in David now, because what impact do you think the past 18 months has had on the variety of customers served by banks, and how has the ability to deliver a seamless experience been affected as a result?
Yeah, thanks, Susanna. So I think initially my observation would be that the customer population hasn't changed significantly. I think our risk appetite hasn't changed. We continue to kind of onboard and service the same level of risk of customers. But what has changed is the way that they interact with the bank. So with the closure of branches, particularly in earlier lockdowns, more and more customers have moved online. And that has speeded up what was already an increasing trend. But what it's meant is a lot of customers who are maybe less confident or less experienced in the online world and kind of online banking and e-commerce have moved online, which has introduced its own risks. I think in terms of the striking the right balance between a seamless experience is always sort of the real challenge, to make sure that we disrupt as few legitimate and genuine customers and disrupt as much fraud as possible. And I guess where we're investing in that heavily in the moment in Lloyds is around self-service. So allowing customers more opportunities to service their own needs without forcing them into phoning up a call centre, for example, and potentially waiting in a queue, then speaking to a colleague to resolve queries, etc. So what that looks like in practice is we can ask customers to log on to their banking app to authorise transactions or respond to push notifications. So that's trying to aid that sort of seamless journey and minimise the disruption. And I think one of the other areas we've invested in as well is with the branches, there's often a sort of fallback position of, well, if we can't, for example, verify identification and verification documents electronically, then we divert customers into branches. But with the branches being closed, it has speeded up that technology to actually look at opportunities to stop having to kind of refer customers to branches. And again, I think that's useful because it's minimising that disruption and making it that bit more seamless. So I guess in summary, I wouldn't say there's a significant change to our customer base, but I think there have been improvements and continue to be improvements in the technology that we use to make that journey and that experience much more seamless.
That is absolutely key, isn't it? Is making it a seamless and pleasant customer experience. So what is the biggest challenge, would you say, Adam, in balancing that need with the need for effective fraud and financial crime prevention?
Thank you. It's an interesting one, isn't it? On one hand, you have to comply and you have to make sure that everything you're doing is complying with regulations, making sure you understand the customer, but letting the good guys through and stopping the bad guys. And you don't want to do it in a way that you hamper the good guys from getting through the system. So it's this balancing act. And I think in the age of digital as well, right? Everyone wants everything done yesterday. No one wants to wait anymore. You know, if there's too many delays, they will disappear elsewhere. So, you know, onboarding, you know, David sort of summarised it really well. So onboarding, if it takes too long, people will give up. Right? If you've got ongoing monitoring, you're pushing out too many alerts, you're blocking too many payments, you know, things are taking too much time for customers to make payments. They're likely to go and find another bank and go elsewhere, which will cause revenue issues for your organisation. But at the same time, we all want to catch the bad guys, right? We want to make sure that we let the good guys through the system, allow them to carry on transacting normally, potentially increase our revenue growth from those customers. We want to make sure that we're not doing that for the bad guys. We're stopping those bad guys. So, you know, that balancing act, to get that right, you know, there is a few things that you have to do. You know, you have to have the right processes in place to make sure that you have the right steps you're going through. You have to have the right people to make sure that you're doing accurate checks in a timely manner and getting the right outcomes. You know, but one other thing that I think has to happen is we have to put the right technology in place in order to make that as seamless as possible. And, you know, David said, you know, it was really interesting what David was saying, that, you know, Lloyds are putting stuff in place, you know, like the custom-facing systems. And I think technology is going to play a bigger and bigger part now in balancing that compliance need and customer experience, customer satisfaction. And I think gone the days where we have siloed systems that are disconnected, because if you have lots of manual processing in the compliance world, you have lots of disconnected systems, you have inaccurate or old data, all that stuff takes time, right? And I've heard of stories where, especially in the corporate world, where you're onboarding corporate customers, that can take weeks, if not months, to onboard effectively corporate customers. And if you do that for retail customers, you take days and days to onboard retail customers, they're just not going to hang around, they're going to go elsewhere. So I think you need to start bringing data together, you need to start bringing in that end-to-end seamless process. You've got to remove the manual processing and ultimately make sure you end up with a system where the customer is in control of providing their data, but on the back end, there's enough checks, validation, and effectiveness to make sure that you understand that customer in that holistic perspective. So I think technology is moving that direction. There's technology out there that does provide that seamless connection between all the dots. I think technology ultimately will play a bigger part in making sure that we're managing compliance risks, we're stopping the bad guys, but letting the good guys through, and making sure we're not hampering those good guys throughout that life cycle journey.
Absolutely. And let me bring in Phil, because we've heard from Adam, we've heard from David about different approaches being taken. What else is happening? What are the main factors do you think need to be considered when it comes to reducing customer friction?
Well, it's some similar themes to what Adam and David suggested, but I think the starting point is, no one really wakes up wanting to speak to or deal with their bank. So you've got to take an approach of, right, how am I going to make this a good customer experience for the consumers? And there's been a lot of pushes, and Lloyds have done some great stuff, and I think we have as well in Oak North, and plenty of others in making those workflows and those experiences really good for the customer, but stopping the bad guys at the same time. I think you've got to take a step back. You've got to understand, what's the art of the possible, what is feasible, what risks can tech mitigate and what they can't. Understand your demographic. What actually do the customers think are the friction points? Not what you do as the bank, but what do the customers feel, and where do they want improvements, and where do they want a better seamless process? So if I think about factors, it's probably three key ones for me. One is data, and just building on some stuff that Adam said there. Don't just collect data for the sake of it. Are you actually going to use it? Is it useful? Is it superfluous? How are you going to ingest it, and how are you going to grab it? And some banks have made some really good progress in having some quite cool user interface technology and making the data capture seem like quite a palatable process from a customer point of view. And I think that's been a very good push forward from the banking industry, or indeed using APIs to third-party vendors to ingest data from other sources. And I've seen that in the commercial world, direct links to Companies House to pull back data so that the customer doesn't have to fill it in. Doing live checks. So this is a real push now in the industry in terms of photo and selfie ID and doc checkers when you're scanning documents. A lot of cool fraud controls in terms of tracking devices and IP addresses, and similarly on the AML side, screening for PEPs and sanctions and adverse media, but doing that all live and doing it in the customer journey, not waiting for the customer to finish and then doing all of those checks afterwards, which can create a really clunky process for the customer. And I think a really key part, which sometimes gets forgotten, is making sure you've got the right workflow at your own bank to make sure that the tech you implement and the data you get is ingested properly, is dealt with properly, and escalated appropriately, and you have the right audit trail.
Mm-hmm. Let me bring in sure. Vesa now. Vesa, what do you think? How important is real-time data and knowing your customer?
Well, hugely important, Susanna. Yeah, we are seeing lots of initiatives of instant payments coming over. Cross-border transactions will be here soon. I mean, instant payments. So it is important that we have all the tools available. But something I would like to add to the gentleman here regarding customers' role is that I think, especially when it comes to fraud prevention, that we as a bank sector, we could be more transparent and participate customers to control some features as well, like the spending limits or or the internet usage for their cards or geo-blocking. We have really good experiences of sending our customers notifications of transactions. And so that is something that can also take friction off when we give some control to the customers themselves.
Mm-hmm. Thank you, Avesa. And just before we move on to new technologies, I do want to ask Adam a little bit more about the ongoing customer lifecycle and risk management. How do you think this is set to evolve in response to everything we've just discussed?
Yeah, I think the conversation we've had so far has been very interesting. I think everyone's coming to that same conclusion that the customer ultimately comes first, and this is an evolution that I've seen, or it's happening. I'm not saying, you know, it's happening right now, and it's happening quite rapidly. You know, and here at Nice Actimize, we look at taking a customer-centric approach, and our customers and even industry as a whole. I'm hearing them talk about customer first, customer first, customer first, and the other panelists on this panel exactly mirrored those comments. And what I would say this is, and it's something I mentioned earlier, is taking a customer lifecycle risk management approach. So from the minute that customer comes to your door and says, I want to open an account, all the way through that time that customer exits the organization, there has to be an ongoing, accurate, real-time understanding of that customer and of that customer's risk. At every single point throughout that life cycle, we have to, or we should, we should have as accurate understanding of that customer as possible in order to manage that risk. I guess, what do I mean by that? I think the days of looking at transaction monitoring over there and then screening over there and fraud monitoring over there, I think are gone, because the context is, if you look at transaction on its own as a transaction without any context, it's very hard to determine whether that is suspicious or not. Okay, and the same with the KYC alert without any context behind that. Again, it's very difficult to determine whether that is suspicious or not. But if you can start wrapping all those data points together, like Phil said, like David said, and like Visa said, you can start getting that context of that customer. So, you bring a KYC alert and you enrich it with some transaction information, some screening information, and maybe some fraud information. Those events collectively start giving you that context of that customer. What is normal for that customer? What is abnormal? You start bringing external data, like Phil mentioned. You've enriched that customer profile even more. And that context helps you determine suspicion, helps the systems to determine suspicion. And ultimately, what you're going to get out of that is more high quality alerts. It's going to result in ultimately high quality investigations. And this is what I hope we all do it for anyway, is stopping the criminals. It should, at the end of the day, result in better quality reports, SARs, STRs, whatever you want to call them, going to law enforcement to say that this person is highly likely to be a criminal because of all this data that we've got now, and we hand it to them, not necessarily on a plate, but we at least give them a head start in terms of making their investigations effective against criminals. So no, I think that's the approach everyone's going to, and it's not just the UK, right? I'm hearing this in across Europe, Africa, APAC, and even the Americas. This is a global initiative, I think, and everyone's awakening to the fact that this is what has to happen. This is change that is needed.
Absolutely. Let's bring in Phil now, because I know you wanted to make a comment about what Adam's saying.
Yes, thanks, Suzanne. I totally agree with what Adam is saying in terms of bringing all of the pieces of the puzzle together. I think what a number of private sector people would probably say is, well, it's all very well and good in theory, but it's really expensive, got a lot of legacy systems that won't talk to each other, and priority wise it's probably maybe down a number of rungs. So I think there's a key part here in how can you flip the conversation on its head to say, well, not only can we bring data together to fight financial crime and fight the bad guys, etc., but how can we bring that data together to make better commercial decisions and better lead generate and all of that type of stuff. So I think firms need to think about it in both ways, and I think that not only helps you prioritize stuff internally, but can help you get budget and etc., etc.
So let me bring in David. David, which new tech do you think holds the most potential then to strengthen financial crime strategies and help with the overall business goals and aims as Phil was outlining. Are there any examples of success stories that you can share?
Yeah, thanks, Susanna. So totally agree with what Adam and Phil were just saying in terms of the tech that's available and the opportunities that are available that tech presents, but yet I do think there's a gulf in terms of how that's implemented within banks, and particularly kind of large tier one type banks that have gone through mergers and demergers and acquisitions, and the architectural landscape is complex, to put it diplomatically. So I guess in terms of the real challenges, that landscape and data, I think, are the two challenges and hurdles that we must clear in order to really start exploiting that new tech. A few areas from a kind of strategy perspective that particularly interest me at the moment, kind of secondary screening. So I think using AI and machine learning to reduce the number of false positives that are generated from rules-based systems. I think network analytics and network visualization, I think that's a real benefit, because people can just look at, and analysts can look at and review so much more and powerful information visually than they could if it was just rows of data in an Excel spreadsheet, for example. So I think that visualization piece is important. And lastly, I think the other piece that's particularly interesting at the moment is how we can combine all that data. So kind of to Adam's point about bring all the data together and look at it holistically, score it, and make sure we're looking at the high priority areas. So a couple of examples that I've seen. So recently, I've seen some technology from Silent 8. So they produced that, a sort of, don't mean to downplay it, but it looks quite simplistic. It's easy to tune. Colleagues without having data expertise can understand the rules, and that technology replicates the decision colleagues make, which frees up the time that colleagues can actually spend on complex investigations. Another supplier that has kind of impressed me from what I've seen is Quantexa, and I know they're kind of a big player in the market at the moment, but they really seem to do that data visualization piece well. And I think the third example of a supplier or technology that I think is pretty good out there is FeedSci. So they produce a transaction monitoring and detection system for fraud, and within Lloyds, that's what we use in the fraud space, and that's detected and prevented millions of pounds of C bills and B bills, so the government loans going out the door from fraudulent applications. So I think there's lots of great examples. It's just often challenging and expensive to actually implement and deploy those, but there are some examples. And I guess very finally, I would say that implementation piece is absolutely critical. If you sort of don't have your data in the right space and you try and implement too soon, it becomes prohibitively expensive, and you get diminished benefits, and you see far less value than if you have the data in order and fully utilize that technology.
Absolutely. So we're talking here about harnessing the power of new technologies. So let me bring back in Adam. Many banks are using advanced analytics, as we've just been discussing. Why is this, and how is it revolutionizing traditional methods?
So I think the fact that more and more organizations are using it shows it isn't just a buzzword. There's actually proof behind the term, if you like. So my view here is AI, machine learning, all the other bits that you have there, it's no longer an option. It's no longer nice to have. It is essential. If you look at some of the regulators and some of the NGOs around the globe who work in the fin crime space, they're now saying that technology is going to play a key part in helping to fight financial crime. I said earlier, but if it's implemented correctly and you understand the outcomes you're trying to achieve with it, it will help to make your fin crime program more effective. Okay, it will help improve detection. It will help to manage alerts better, and it will help to make the investigations more effective to give better outcomes. And the operative word there is if it's implemented properly and you understand the outcomes you're trying to achieve with it, there's no point in putting AI in for AI's sake. Okay, and it sits into three areas: data, detection, and investigation. And the data piece is, and we've all talked about it here on this webinar today. Data is absolutely critical. The old adage, crap in, crap out comes to mind, and it's still true today, right? If you put crap into the system, you are going to get crap out the system. It's as simple as that. So data is the biggest asset, and I think one of the other panelists mentioned that you have to, if you grab data, you have to grab out data that's relevant. There's no point just grabbing everything and going, well, what do I do with it now, right? There has to be a reason for grabbing the data in the first place. But likewise, you don't want that data to be stale, you don't want it to be inaccurate, you don't want it to be irrelevant. So you need an ability to continually assess and monitor that data, as we mentioned, in as real time as possible. You need to make sure that you're getting data from the right data sources. Okay, there's no point in getting data and then it's unvalidated or it's incorrect, right? So you have to make sure that data's coming from the right data sources. And it's allocated to the right customers. Okay, you don't want to allocate the wrong data to the wrong customer because, again, it's just going to be completely useless. So AI at the data stage can help with this. It can help to resolve data. So entity resolution is one tool out there. David mentioned it, network analytics, again, which is what vendors offer, like a Nice Actimize offer that capability. So network analytics, entity resolution is key to making sure the right data goes to the right customer. There's duplicates reduced. But also it's making sure that data is constantly updated and constantly monitored to make sure that there's nothing stale about it, there's nothing inaccurate about data. Once you've got that data, it will then help with the detection. So because you can better segment the customer, you can better make sure that you understand what's normal versus abnormal. That means you can assign better rules, better monitoring, better detection to that customer, and look at anomalies, look at inconsistent behavior, look at their networks, look at what they're doing across the network. So that will help inform your detection capabilities with that better insights into the customer. And therefore, suspicious activity that you alert on is more likely to be suspicious activity rather than false positive activity. And then the other ability that technology now is giving is not only is it helping to detect better, but it's also helping to predict better. And a capability that is available is once you alert someone on a system, based on learning from previous investigations, previous activity, previous dispositions from investigators, the technology is now able to say that this alert, based on these multitude of factors, which are variable, the likelihood that this is going to result in a SAR is 90 out of 100 or 100 out of 100 score, or the likelihood of this being a false positive is down there. So it has the ability to auto-route alerts into auto SARs or second line defense teams, or even hibernate alerts if it thinks it's such low risk that it's probably unlikely to result in SAR, it can auto hibernate.
But let me bring in Phil now, because there still are risks in implementing AI, for example, in anti-money laundering processes, aren't there, Phil? I mean, what kind of challenges exist still?
Yeah, absolutely. And I'd probably challenge a view of Adam there around the necessity of AI as well. I think it's a little bit of a red herring in the industry, and it's certainly got a role to play in the bigger banks who are exposed to more criminality, certainly in the retail space, and have got more data to bring in and ingest. And I think there's value add there. But I think for many banks, actually, it wouldn't add the value, and it is cost prohibitive. And it's, whilst they use tech, I don't necessarily think that many banks have to use AI, and I think there's a difference there. But notwithstanding, if you've assessed your business and you think that AI is the way to go, and you're going to actually derive value from it, what Adam says around data is absolutely key. But what I would say with that, if your data is really bad, is the cost of resolving the data issues actually going to impact the value add you're going to get from the system at the other side. I think there's a real play now on understanding the technology you're implementing. The regulator's got a big focus on, you can't just implement tech now just because you want some tech. You've got to really understand what it does, how it's configured, how it adds value to you and your process. Is the technology going to increase your resource overheads? Is the output going to increase? Okay, might be good output, but are you going to need more staff, more numbers to deal with it? How are you going to reconcile and monitor that system? Goes back to properly understanding how it works under the hood, and kind of culturally, are you going to move a lot of reliance to that system? and put much more faith there, and then you're not looking over somewhere else, and something could happen in a place that's not covered by technology. So I think that's some of the key challenges from my perspective.
Okay, well, let me bring in Visa now. How do you think perhaps that the advances in analytics, machine learning and AI could reduce the number of false positives in particular that can hurt customer relationships? Do you think that these technologies really do play an increasingly key role, or have the potential to anyway?
Yeah, well, first of all, it's been really, really interesting to hear discussion here about the advantage of AI and also the challenges, because we've been hearing about AI and machine learning the past few years, and there are obviously hundreds of different solutions and adaptations to the banking when it comes to AI and fraud and fighting crime being one of them. But then the obvious challenge is the data, and if the systems are not talking to each other, that's a gap. But I generally believe that when it comes to, when we look at the false positives, there are absolutely a room for AI and machine learning if we compare it to the old school static rules that were very black and white and didn't understand the context of a transaction. I think Adam said it earlier that you need to understand context. One transaction can be normal to one person, but not to another one. So the context is important, and I think AI can be more flexible. It can react more quickly on the changing fraud landscape as well. And I see that's the way forward. However, there are many bumps on the road as we get there, I would say.
Mm-hmm. Yeah, as we've been highlighting. Well, let me bring in David now, because we talked about how the quality of data is just so important in achieving good results. So do you think there's potential for new data sources to try and improve this? For example, customers' digital footprints, online consumer behaviors, or future digital IDs, and is the customer ready for this?
Yeah, I mean, I think in terms of the data sources, absolutely. I think there's always opportunities. The more data we can have, the more intelligent we can be, and I think a lot of these future enhancements will revolve around the data that becomes available. I think sorry, apologies. There are a lot of the data is starting to become available. So where we're kind of starting to see different devices that was mentioned earlier that customers are using, and what we're now starting to be able to see is what activity, kind of IP address activity, location activity, are we seeing the customers are using for their banking app as well as other apps. So are they trying to disguise where they're logging on to their banking app, for example, but not so when they're shopping on Amazon. So I think we're starting to see that come through. I think it was mentioned earlier that what we do need to think about before we ingest more data is what are we going to do off the back of that? So if we have this data, what's it really telling us, and how much can we read into it? Because often you can look at a new data source and think, oh, that'd be great to know, that'd be fascinating. But actually, there can be a lot of legitimate reasons why customers may behave in particular ways, and it's not always an indication of fraudulent activity or financial crime. So I think doing sufficient due diligence and saying, right, why do we want this data and what are we going to do with it is really important. I think another aspect that we have to be mindful of is around kind of data protection, and as you say, how comfortable is the customer with us knowing that information. The last thing that we want is a sort of Cambridge Analytica style scandal, which kind of blows up in our face, and we certainly don't need that kind of reputational risk. So I guess overall, optimistic for the future. I think there's a lot that we can glean from the new data sources, but I think we need to temper that enthusiasm with understanding really what the data is telling us, and what the future benefits are for that. And again, as we keep coming back to, what does that mean for the customer? Are we able to use this data in order to demonstrate that this is a genuine transaction versus this is fraudulent? So again, maintaining that mindset of what impacts on the customer and what level of disruption
is absolutely key, keeping the customer at the forefront of minds. Well, thank you very much, David. We're about 10 to 15 minutes away from your questions, so do please keep sending them in on the right-hand side of the webpage. Now, AML and fraud teams have always operated in silos, but we are seeing this start to shift as teams are increasingly converging to face the challenge together. Now, on top of this, the discussions of liability are evolving, and it's times like this when we have to remember that all stakeholders are working together towards a common goal, and collaboration has never been so important as right now. So, Vesa, I want to ask you, what do you think then the benefits of the framework approach are and having these teams working together?
Thanks, Susan. That's a really good one, and to be honest, at Nordea, it hasn't been that long time since we put these two teams together. I mean, fraud and AML together with KYC and sanction screening. So I could say that we are still learning, and organization changes like this will take time, but there are few obvious benefits, of course, and one is the common platforms. I mean, we are all looking at money flows. We do have different perspectives. In fraud, you could summarize it, we protect our customers, whereas my colleague doing AML monitoring is looking at anomalies that we see the customers are actually committing crime. So we have to remember different perspective, but still use same platform, share scenarios, and also to have common initiatives that could work together. Just one example is the use of cash. Nordic countries are becoming cashless societies very soon. So why you actually need so much cash? That's an important questions for us at Nordea nowadays, and that works both for fraud prevention but also anti-money laundering.
Thanks, Vesa. Let me bring in David. Do you share Vesa's view on this? How have you found the framework effectively in building a more frictionless journey for customers?
Yeah, so I think at Lloyds, we're in the midst of that kind of transition to bring both fraud and AML closer together. So it's an area that I'm particularly interested in at the moment. So presently our second line function combines fraud and financial crimes. That was recently renamed economic crime prevention. But across the group, there's still silos, and often there can be a combined reporting line, but in reality, fraud still operates separately from the AML side. So as I say, the strategy is really to combine those areas. I think as Vesa said, the data is often the same. We have a reasonably limited amount of customer data, so we don't really want different teams and colleagues looking at in their different silos the different elements. We want that holistic view to say, well, if we've got some fraud alerts and we've got some know your customer challenges and there's maybe some adverse media, holistically that's much more interesting than three different alerts in isolation. So I think where we can, as an example, where we can kind of see benefit from bringing them together, one area if you think about application fraud. So presently we'll look at the applications, undertake some kind of scoring activity, look at different aspects, and then accept or decline that request for a new product or account. Should we have a combined fraud and AML approach, I think we're able to kind of maybe dial down our appetite on application fraud, let more customers in the door, but then kind of back ourselves with the technology that we have. So if we look in the know your customer space or our transaction monitoring systems, and then actually monitor what happens. So rather than trying to predict up front, which we'll never get right all the time, actually see what happens in reality and then react to that once it's happened, rather than potentially declining new customers' products on the suspicion that they may commit fraud or financial crime. But again, I think it often does come back to data. If we can bring the data together, we can generate a great deal more value from that. And I think then by combining it, we can also review the customer once. So rather than kind of different touch points and different levels of customer engagement, we can review the customer once at the right time with the right data and the right questions in order to gain comfort that it's a genuine customer or we're experiencing fraud.
Yeah, David, thanks very much. I want to bring in Adam, because you heard there from David about the challenges when it comes to data sharing. So how else do you think, Adam, that a more holistic view of data can be achieved?
Sure. I think both David and Vesa said it quite well, really. You know, it needs to come together, and there are challenges. I think the siloed nature of it is naturally the challenge, right? You know, and the bigger you are as an organization, the more likely there is to be siloing between the two. And ultimately, I think my view is a successful fraud is money laundering, right? So there is a unity where the two probably have to come together. But how can the holistic view of data be achieved? You know, I think it's quite simple, really. I think the fact is, I think Visa said it quite well, is it's having that single case platform where all the data comes into a single point. You know, if you've got two separate case platforms or two separate detection systems operating independently inside of each other, then you're never going to get that holistic view of data, because you've effectively got these multiple data points scattered around the organization. So I think there has to be a single data mapping across the board, and it comes back to the points made earlier. You know, I'm not going to sort of lay the points on them, but that single unified view of risk and the customer. So I think that's where we have to go with it. So all the points that we made earlier in this webinar, I think, are true for this FRAML concept and this FRAML positioning.
Yeah, absolutely. Thank you very much, Adam. Just before we go to some audience questions, I do want to touch on something that's been cropping up in the industry. We're seeing a lot of debate about who should be liable moving forward, the bank, the consumer, etc. So Phil, tell me what your thoughts are on this.
So I think if we're talking about liability in the fraud space and fraud losses, then it depends. It's circumstance dependent, and the bank has a role to play and the customer has a role to play. Naturally, the bank is responsible for making customers aware, as they reasonably should be, around fraud and scams, and ensuring that there is that transparency around things that might be out there. On the flip side, customers absolutely have their own responsibility to do that as well, and be vigilant around scams that they might be receiving themselves. The bank has, of course, got liability from its own cyber-related controls, and controls over internal employees, where that could feasibly result in customer loss. So it really depends, where the loss happens, and particularly if it's scam-related, the steps that the bank has gone through to make sure that the customer really wants to make that payment. And so particularly at payment stage or at new beneficiary stage, that there are steps that the bank are taking to make sure that the customer really does want to say yes. And as that's been a change in the industry over the last sort of 18 to 24 months. But yeah, it's really dependent on the situation.
Certainly is. So many different situations cropping up as well. So thanks very much. Well, it's been a really detailed discussion so far, and we hope we've found plenty of insights from our panel, but it's not over yet, because you've sent through quite a lot of questions. So let's get stuck in. And we do have the first question coming in. How can a FRAML approach transform customer relationships? Have you seen success here? Vesa, can I ask you to take this one?
Yeah, that's a really, really good one. And as I told you, we are actually quite new in the situation of combining these two. So I can really actually come back to the example I took regarding the cash and the use of cash and how that's impacting our customers. And as I said, the Nordic societies, well, Europe and globally, we see a move from cash to cashless society. So that's an obvious thing. And if you think now Framel approach, what we do at Nordea is to ask customers how much you need cash per day, per month, something like that. So we can actually also let the customers decide. If they said, well, I don't need cash at all, then that's ticking the box on our side. Then if we still do have customers who really needs cash. There are areas, for example, in Finland that the nearest ATM is 200 kilometers away. So you probably need cash more often, but you have to embed that information to your risk profiles at the bank.
Thank you, Vesa. Now there's another question that kind of follows on from this. We've heard a lot about the Framel approach, but what practical steps need to be taken, David, for an organisation to go about transitioning to this new approach?
So I think first and foremost, there's a kind of cultural angle to it. I think often the two have historically been in isolation, and therefore there's maybe an element of someone's an expert in fraud and thinks, well, I don't know financial crime, or vice versa. And I think one example at kind of trying to break down that mindset is, should new regulation come up, for example, you wouldn't understand that in the first instance, but you learn it and then you understand what that means and how it's implemented. I think that sort of mindset applied across fraud and financial crime would go a long way, and almost looking at the kind of core data that we use and the overarching objectives. So our overarching objectives are the same. We want to disrupt and identify and detect fraud and financial crime. We want to report sufficiently detailed information to law enforcement in order to kind of allow them to prosecute and stop criminals committing fraud and laundering money. So I think it's that kind of culture to bring the areas together and try and make sure that commonality is understood. And obviously physically is one area of doing it, but that's obviously been challenging over the past 18 months. But certainly within Lloyds, within our transformation areas in particular, they're quite focused on the same locations and being in the office and that collaborative space. So I think even physically having colleagues in the one location can certainly break down some of these barriers and allow conversations to kind of organically evolve, and then the benefits will start to realise.
Absolutely. Well, thank you, David. And Phil wants to come in here. Phil, go ahead.
Just a very quick point on that. I don't think that audience participants or anyone in the industry need to go away and think, right, I have to create a a Framel unit at my institution. I think this is more about creating synergies between the two teams as opposed to necessarily wedging the two teams together, which might not work in your institution. So it's what are those really good synergies that you can do? What data can you share? What systems can you leverage off between each other? Can you make any cost efficiencies as a result of that? So yeah, to what David was just saying, it's taking a step back and understand what you really want to get out of it first, and then go from there.
And I want to ask you, Phil, as well, this question coming up, going back to the point on new data sources that we were talking about a little earlier. How do you communicate the need for this to the customer? Just how important is trust?
Well, I mean, really important. And being transparent as a financial institution is absolutely key. And as a consumer myself, I wouldn't want to bank with an institution that wasn't allowing me access to understand, what check. Well, to the extent that they could tell me what checks they were going to do and how they were going to utilize my data. There's guidance in our industry about exactly what customers need to be told from, a credit search point of view or other searches that put different footprints, on the customer from a check perspective, and being transparent around what exactly it is that they're checking and what that might mean for the customer as a result, as well as whereabouts in the world they're sending their data and and what they could do with their data as a result, certainly in terms of non-fin crime stuff such as marketing, etc. So all of that transparency has to be there, and I think customers are pushing on that a lot more now than they used to, and are expecting all of that information clearly, and not hidden behind in tiny little subtext at the bottom of websites. So I think it's really important to engage your internal comms teams, your internal marketing teams to make sure you get all of that stuff right.
Absolutely. Okay, thanks very much, Phil. Well, I want to bring in Adam. Adam, because we touched on the fact that AI has its own challenges. So have you got any more tips? This is a question that has come in for refining AI strategies.
Good question. So look, I think Phil made a comment earlier about the AI piece. I think first and foremost about AI is you have to understand what you're trying to achieve with it. Okay, and what I'd sort of make clear earlier is there's a place for AI, but it isn't a smoking gun. Okay, it will work if you know the outcomes you're trying to achieve. So there's no point going to a vendor and say I want AI because everyone's talking about it, and you go great, there's some AI, and they go well, I don't know what to do with it now. Okay, and I think one of my tips is to be tactical with it. So no one's going to expect you to say I want AI across the entire fin crime framework. Everything has to be AI, transaction monitoring, screening, fraud, the lot. Because that will be costly, right? To have to change all your systems to AI. So be tactical. I think one of my tips is to look at an area where you're having problems. You might have a high false positive rate. You might have, there might be excessive time you're taking on particular investigations or particular parts of your customer journey, and look at implementing AI or machine learning or some sort of technology in those areas first and foremost to improve your effectiveness and efficiency. That can then grow across the program. So, so that's my view is understand your program, understand your life cycle, understand where your pain points are, where you've got bigger challenges, and then look at what technology can be put in place in those areas. And it's also about having effective governance. So you have to make sure the AI is working as it should be working. So you have to have a way to control it and make sure that it's always optimized, if you like. But yeah, I think my view is be tactical with it. Look at where your problem points are and your issues are at the moment in your organization, and then look at what you can do to manage that with technology.
Okay, thank you so much, Adam. Another question that's come in, Lisa, if you could take this one. What new tech do you think holds the most potential to strengthen customer protection and financial crime strategies?
Yeah, let me think. I think I mentioned earlier the customer view and the customer roles in control. So I really think that there are room in our mobile banking apps, for instance, to make them better, make them more secure, make them something that we as banks, we transparently show our customers what controls they can have, how they can engage to combating financial crime. So not necessarily any tools or platforms, but the technology over the customer experience itself, like mobile banks. I would say that.
Thank you very much. Now I'm going to put the last question to David. David, tell me, what strategy do you personally think is most effective? Emphasizing customer education or focusing on identifying the criminals?
I think education. I think both are important, but I think educating our customers is critical. So the way the fraudsters often work is they sort of, from a psychological perspective, put pressure on the customer, make them try and react without kind of thinking logically through the scenario. So we're trying to move a lot of our education towards being more proactive rather than reactive, and trying to get a sort of hook that's stop, protect, and challenge, the same as Take 5, but try and kind of flash that up regularly with customers, targeting the right customers at the right time in order for them to be able to recall that if they do receive a phone call or whatever the type of fraud is, so that they can subconsciously take a step back and say, wait a minute, this doesn't feel right. So I think a huge amount comes down to education and awareness, and the more as an industry and as banks, etc., we can do to increase the education of customers and bring it to the forefront, the better we can kind of detect and prevent financial crime. Because with all the technologies in the world, we're still never going to be able to crack this. The fraudsters are very adaptable and flexible, and whatever solutions we'll implement, there'll be ways around it. And so we need to try and bring this to the forefront of our customers' minds and make sure they can recall that in the moment.
Okay, David, thank you so much. And thanks to Vesa, Adam and Phil. Your insights have been very valuable. So I hope you've enjoyed the past hour, and it's provided some very useful tips that will help you refine your own fraud and financial crime strategies for years to come. From me, Susanna Streeter, goodbye.